Folks, Dan Frio here. The rate update today is February 17th, 2022. Got it right again. We're going to talk today or this morning. Remember, guys, this morning is just a brief little recap of what's in the news and where rates started the day. Then if there's major news throughout the day, I'll post another video kind of bringing you guys in the loop of what's going on. But what I try to do at the end of each day, if there's really no events, is go over programs or things that just make you think or say, I didn't realize that. Or you might know a family, friend, neighbor, relative, coworker, or something like that. It's like, they're in that situation. Maybe we can have them reach out to Dan. So don't go away. That's what we're going to talk about next. Alrighty, so let's get to the headlines. What did the headlines say? And this is kind of cool. It was kind of like, why did this pop up? And this is one of the things I'm going to talk about this evening. Right in here. Do you use a bank, a broker, or search engines like this that I highly suggest you don't use? But the main purpose for this is we're going to go in and what's the headline news? Well, is Russia in? Is Russia out? Is there a war? Is there not a war? Well, 2 days ago, Russia said they're going to retreat, and the stock market rallied and mortgage rates jumped. And then now we have this. So what is going on? So this is what I mean by if there's some events that's going on through the day that you guys need to be aware of, that's why I'll post this. So the economic calendar for the day is basically, let's go through here. And I don't know why some of this didn't make the headlines. So building permits, fantastic. What we said is what's driving home prices up so high is the lack of supply. Well, builders are doing what they need to do right here. Initial jobless claims. I don't see anywhere in the news where they said, well, more people filed for unemployment than was expected and that filed last month. So if the Omicron is kind of starting to cease, why aren't people going back to work and more people filing unemployment? There is a complete disconnect and I still don't get it. Please comment down below. And you can't say, wages stink. Well, it's better than zero. And I don't mean that with any disrespect, but if a lot of the stimulus is gone, how's everybody going to pay their bills? Okay, so that's my question, I guess, and I'll leave it at that. And then you go through here, the Philly manufacturing index. Did anybody realize that it's, last month was 23, the projection was 20, and we're at 16? That's not a good sign. Okay, so there's some signs in the economy looking like it's cracking for some reason, and I can't put my finger on it. Okay, so this is my major emphasis of study right now. Real estate news, as you see through here, housing starts 4.1% versus 0.7 estimate. Went through that, and so that is some of the news. Here's a little caption that I saw yesterday. This gives you a good idea why a lot of prices are going up, especially in homes. You could see here, steel products up 113%. Okay, so there's a lot of materials that are going into things causing the rise in that inflation index. Another thing is part of the headlines that I noticed today, and I'm not going to go backwards on this, but here, let's just go to the markets. You're going to see, let's just go here. Walmart says customers are paying attention to rising prices. Walmart tops estimates. Okay, what does that mean? Okay, that basically means that Walmart's earnings came in higher than they expected. Well, maybe that's a part of inflation too. Let's look at it. The supply chain is messed up. Raw material prices are going up. Walmart's profits are going up. Everybody is juicing the economy or people in the economy because they had extra money. That's got to start coming out because the Fed is stopping printing all the free money. So I'm going to leave it at that. So let's get on to why you're here and let's see where mortgage rates are and dive into that section. So mortgage rates open the day at 4.1. It is down 2 basis points. Let's focus in on here real quick for the newbies. This tells us the rate. It tells us basically the program type right here. It's a 30-year fixed on a conventional loan. If you don't know the difference between conventional and government and jumbo and ARMs, I highly suggest you do a few things. One thing you got to do is click the thumbs up button, subscribe down below, hit the bell. Every time I post a video, you're getting an alert and you can learn this stuff. Okay, so here's what rates are. 4.1 down 2 basis points. And what that means is 0.02. We reference that number is 2 basis points when it's represented there. We still are showing a cost factor right here of 0.4 in points. So I have people that are commenting on my YouTube channel saying, hey, I predict 4.2. Buddy, you're there. Okay, so kudos. So that's what this is doing. This is the 52-week high and low that way. 2.78, we were there at some point in the last year. Now we're at 4.1 with the high is 4.02, which we saw yesterday. So that's that. So zoom out and let's go across. Now we have the 15-year is at 3.34, down 1 basis points. Is still, that one also comes with points needing paid. Okay, you're seeing right there. Let's see, we dodged 1 basis point below the 52-week high right here, and I'm not going to do that all the way across here, but the 30-year FHA/VA rates are 3.7, down 5 basis points from where we were yesterday. The 30-year jumbo is 3.58, the 5-year ARM is 3.7. Okay, so you can see we're 40 basis points off of the 30-year fixed right here. So again, my key point there is if ARMs get to at least 0.5% or more difference in the 30-year fixed, I'll be quoting you an adjustable rate when we reply back to your emails and explain what an adjustable rate is. If you deem that the adjustable rate is not at your risk tolerance or you just don't want it, please just say so. Not a hard sell. You're the boss. We do what you ask us to. Okay? So that's that. What's the MBS is doing for the day? Well, they're up 33. Let's refresh it to make sure it matches. Up 34. It just revamped. Okay, why? People are starting to flee to safety again. Why? Russia might invade Ukraine. And when people flee to safety, you're going to see the stock market drop today. Mortgage rates rally. So if you're with us and you're not locked in, you won't be locked in today either, because mortgage rates are coming down and we're waiting for all of our lenders to post. And there's over 130 lenders that we deal with. So that's that part of it. Let's go to the live report. And guys, I know you can't see this and I apologize, but the live report has us up 31 at the time and it gives you some tracking here. This is what I use behind the scenes, but I show you guys this part because it's much simpler and doesn't have all the technicals involved that I have. So if you're looking for any assistance with a mortgage, if you're looking to build, and the building loans are coming out our ears because you guys are freaking out. Your lenders are saying you can only lock for 30, maybe 60 days. Do you know we have rate locks up to 270 days? 270 days. So instead of you guys sitting there freaking, what are rates going to go to? Why don't you lock in? Okay. But your first question is, wonder if rates drop. Okay. If they do, we'll do a free float down for you at no cost to you. Okay. Wonder if rates go up. You're locked in. So why would you not lock in? You're locked in. If rates go up, you take the lock-in rate, which is lower. Rates go lower, you go lower. Kind of a no-brainer. But if you're looking for a reverse, if you're looking to cash out, the huge piece of our business right now is the non-QM, believe it or not. Those are just common sense loans that the big banks don't do. Those are like debt service coverage ratios. So if you're an investor looking to buy or refinance an investment home and you're like, hey, my cash flow, my income from last year is a little off because I was on furlough and this and that. It doesn't matter. As long as the rent from the building is enough to pay the mortgage, you should be good. Okay, we have bank statement programs, 1099 programs. We won't call it stated income, but kind of common sense things. There's a slew of programs we have. So if you're out there and you're in need of a mortgage, please reach out to us. We just joined the largest brokerage in the country. So if the product's out there, we'll get it for you. How do you do that? Right here. You either call us 844-775-5626 or click the meeting button. It'll open up our calendar. You schedule a time and date that's available to you that meets your convenience. Or number 3, hit the apply now button. You're on your way. After you finish the application, it's going to take you about 10 minutes. Be as thorough as you can. It's going to prompt you to what documents we need based on the questions that you answer. Upload those. Probably within half hour, you're going to get a call from me or one of my mortgage advisors going over the application with you to find out exactly what are you looking to do. So thanks guys for watching. I'll be back later this afternoon with some important videos in regards to, do you use a bank? Do you use a broker? Or do you use the search engine like we saw at the beginning of the video? That's going to be an exciting video. So I'll see you then. Bye-bye.